Hey, how's it going? Welcome to Swifty Invest. So check this out. There's a company I'm very bullish on. I have high conviction in this company, and that company is, let's go, drum roll, Lyft. They're growing pretty decent, about 20%. They're growing, and the valuation is only 8 billion. Keep in mind, Uber is worth. Let's look at Uber. Uber is worth 200 billion almost. So the way I look at this is this. Lyft has more room to run, and Uber's diluted shares is a lot. 2.13 billion shares. You know what I'm saying? Outstanding, and Lyft is only about I think four something, right? So Lyft is about five times less, you know, diluted than Uber. That's the way I look at it. So this price can easily run up. If it was to double right now, it'd be about $40, right? But my close, I would say short-term target, I would think they could reach within the next, I would want to say like maybe within the next 6 months to a year, I think they can reach $30. And that would be about a 50% increase from here, right? So it's an $8 billion market cap, right? Keep in mind, they generate about cash from operating activities, $1 billion. Their free cash flow is almost a billion, $990 million, right? On a trailing 12 months. So that being said, right, let's compare that to Uber, right? Because Uber, on the other hand, right, I don't want to do this like a comparison thing, but sometimes you got to look at it because initially I wanted to go to Uber, but I switched to Lyft because it just had a higher return, I would say. So they generate about 8.7 billion, right? But their free cash flow is about 8 billion, right? Which isn't bad, right? But if you put that on a price of free cash flow, it's 23, while Lyft is about an 8. So it'll take 23 years for Uber and about 8 years to generate that same amount of free cash flow. So I'd rather go with the one that's shorter, which is 8 years. But then the most important, why am I going with that one? So the reason why I'm going with this one also is because compared to Uber, right? So I want to show you something. Compared to Uber, right? Lyft is gross margins 34, Uber is 33. Lyft is growing at 19%, Uber is growing at 18%. Mind you, Uber's growing at 18%. Uber is more mature, is growing at 18%. Lyft isn't that mature. The reason why I say it's not that mature is because Lyft has not ventured into delivering food, does not venture into delivering packages or anything. Where Lyft, right? I'm sorry, Uber is at growing at 18% and is delivering food and packages. It's been doing that, right? Lyft hasn't done that. And also, Uber is global. Lyft isn't global. They just became global after their free now acquisition this summer they did. So you're going to see that priced into this earnings that's going to happen next week in November. And I'm hoping and I have a good feeling that they're going to have a beat, right? And most likely they're going to have a triple beat, meaning they're going to beat the top line revenue, bottom line net income, and upgrading their guidance. And the reason why I feel like that's very important because if they can upgrade their guidance, right, I could see the stock obviously moving and pretty much increasing, appreciating from where it's at right now. And my short term target is $30, which is going to be about a 50% return from this within the next, I would say, 6 to 12 months. So that's what I see. I think they're going to do well. So it's the stock I would say to keep on your watch list, and we'll see what it does. Other than that, just wanted to share that and let you guys know I do have position in there. I'm looking forward to seeing what it does. Let's go.